Thursday, January 23rd, market analysis standard. Good morning, 9:51 California time. We see, and of course, I start out with stock market indexes, the E-mini, NASDAQ, Dow, et cetera, and then the futures markets. And then sometimes some other topics, cycles, maybe chart formations, seasonality, which is similar, same thing basically to cycles, except, calendar oriented, and other things too. Now, today, E-mini and other indexes are getting into overbought conditions. Usually when this happens, and you can see on my subgraph that anything above the little red line of 75 on my customized relative strength index leads to a break. If the RSI goes down, and again, I plot RSI much differently than Wells Wilder's line chart, which I learned RSI directly from Wells himself in the late 70s, 80s. So once you're above 75, and we have just barely got above it yesterday and a little tiny bit today also, but above 75 is above 75. It's not the amount necessarily, although that is important. It is the fact that it simply made the RSI turn yellow. So when you see yellow, within 4 days, it topped out, maybe 3.5. Took 2.5 to 3 days to top out. It topped out the same day it turned yellow. This turned red because on top of being overbought, it also had a bearish engulfing ER sell signal in the same day. So that was immediate. Back here, we have situations where it took maybe a week and a half in overbought to finally come down quite a bit. And same thing again and again. Now, in very strong bull markets, you will see overbought very relatively frequently. And again, on our daily data, now we're not talking about 1 minute here. We're talking daily data charts. And the downside moves as a result of being overbought usually happen relatively soon. And they do usually have a pretty good move down. Well worth paying attention to at a minimum, if not trading. And how you go about doing that is extremely critical, to say the least. But we're overbought again. That's the point. And it's not just the SP E-mini. It is other indexes, as you would expect, also to varying degrees. So be prepared. We are probably very soon going to have some sort of significant downside correction. Now, to correlate with that, we're up against historical resistance areas, which is just great. I like the combination. Today, our high is not quite higher. It's missing 5 ticks. The high today is 4 ticks under yesterday's high, and we're right close to the high of the day at the moment. So it won't take much to get higher than yesterday's high. Then, if we have a low all of a sudden that gets lower than yesterday's medium-sized price range, we would have a bearish engulfing sell signal. But hey, that's a little bit of a stretch, and it's not likely to happen, but it can, it does, and my system automatically watches for that kind of thing and takes advantage of it. We have sell signals here involved in the top, and it went down a little bit, but not much, and involved in the top. Green on the bottom, green close to the bottom, that is, green on the bottom of the break. So these red and green bars represent the combination of overbought, oversold, customized conditions, and the engulfing bullish or bearish conditions as well. I'm just missing the engulfing. So we have a doji so far. Okay, enough of that. Let's look at the 5-minute, 1 minute chart. You can see we're just a hair today below yesterday's high, barely noticeable, but that's the fact. But we're still going up, and it could easily get above yesterday's high. Not that that's going to produce a sell signal by itself. It's just getting closer and closer, in my opinion. All right, SPY, not quite overbought, very, very close. On a scale of 0 to 100 always for RSI, I'm only 1 point or less from getting up to 75. At the moment, the last tick, and this is tick for tick, 73.44. The RSI high today has been 74.27. Yesterday, 74.04. So very, very close. Good. And that would be the Spider daily data, which has left 3 gaps behind. I do very much expect a minimum downside move, which is very small, to 603.37-ish, 603.06 to be exact, 603.06, the high of a couple of days ago when it gapped up the next day, which was yesterday. Now that's so close, it's ridiculous. So I'm actually looking for something in the realm of this gap, which is a little bit above and below, let's say 595. So what are we calling it? Oh, I don't know, 596 to 594. Yeah, that'll work. Plus the fact that we're very, very close to the whole time historical highs, a resistance line for the SPY. So you've got a gap to close, or 2, or even 3. There's another one bigger down below. You've got resistance, and you've got almost overbought conditions. It's a hell of a good setup. Next, SPY 1-minute chart. It's only going to show you the detail for the last X number of days, whatever I'm displaying. This happens to be, it looks like about 2 weeks of 1-minute data. And I've got some of the gaps outlined here on the chart, and you can clearly see the gap much bigger because of the fine-tuned data 1 minute as opposed to daily. And then yesterday's up gap also. I don't have a rectangle showing you that at the moment. Otherwise, these are also support and resistance areas besides the gaps. Okay, QQQ gapped up yesterday. Another gap. We're close to previous historical highs, resistance, but we're not quite as close to overbought as we have been in the E-mini and the S&P. Still not quite as good a setup, but close. I'm looking for a move down to the previous bear trend line, the top of a downward slanting wedge, pennant, or a down channel, if you want to call it that. These lines are not quite parallel or even super close to parallel, but it's going to take a long, long time until they come to a point way, way over here in March. So I suppose you could say wedge, and that would be accurate. So now, yeah, look out. We're about to start coming down. And guess what? The QQQs are already down 1.9 on the day now. No reversal, no overbought condition, simply gaps and resistance starting to slip. Next, QQQ 1 minute. And you can see the way it's acted during the day. Open lower, got pulled up by the other indexes, and then it slipped off a little bit, but staying lower on the day all day. And here we go with the NASDAQ NQ. It is also a little lower on the day, like you might expect. It's the little brother of the QQQ. So down 62 at the moment. Nothing special, doji. But yesterday it topped out almost exactly at the secondary resistance area. Primary is the historic highs, and didn't even get close to that so far. So coming down the line is pretty much what I expect. Next, we just simply have the 1 minute detail on the NQ. Opened yesterday afternoon. Remember, this is a 23-hour session. Dribbled sideways to a little bit lower, dropped off during late last night and early this morning, and then has come back a little bit this morning so far. And what about the Russell, or the Dow, I meant, YM Dow? Well, that's been very strong today, but the second day in a row now overbought and getting relatively significant 81 overbought. 90 is one of my major thresholds. I get up to 90 on the daily RSI, I start screaming bloody murder. It's going to top out any moment. But this is simply quite overbought, and therefore increasing the likelihood of it to turn down. Plus today and right now, the prices are at the previous bear trend line, which of course I think sooner or later is going to be overcome and will rally up above it. But first, looks like it's about to have a move back down. We're at the right price, right conditions. Doesn't always work that way, but at the moment, I would watch very, very carefully to see if you get some sort of an indication that this is going to be correct and it's going to start to slide some more. Right now, it ain't doing it yet. And here's the 1 minute chart. Look at that shot straight up. I do have to point out that since the opening this morning at 6:30, which is approximately unchanged on the YM, that's not the opening, but the regular market opening from the previous day's YM close, it has climbed rather steeply, consistently, and sharply. Now, to most people, that looks super bullish. And you know something? Well, that's past tense. This is what we call exhaustion strength. When it gets too strong, too fast, too quick, and starts going straight up. Why I can't say this is exhaustion strength, but it sure looks like a close cousin. So be very careful here. Do not, in my opinion, be a buyer under these conditions and under this at this price. Okay, the Russell couldn't make a higher high. Not didn't even come close, even though it's high and last pretty much right now. Up a little on the day. Resistance level stopped it yesterday, and we have made a minor new low today than yesterday. I think it's already starting to roll over and turn down. I'm not going to be surprised to see it to come down to the next support level, the red zone, in a few days to a week or two. That's exactly what I'm expecting. So there you have the indexes. Let's go to the Russell, 1 minute, sideways momentarily, little tiny resistance level, 4 different times it poked away at the same price almost exactly. And the good thing is that it has lows that are rising. So if they've got a flat top situation with rising bottoms, usually a flat top right triangle, it's called, you're going to break through the flat side and go up to new highs for the morning. Well, we'll see. Okay, bonds. Now, as you know, we caught the bond market on the low of the move exactly to the day, January 14th. The next day, our ER3 signal bought the low on the opening tick at 11:30. That's the price, not the time of day. And got the low tick on the opening bell. Automatic, totally automatic. You didn't do anything. Now, today, we've come extremely close to getting stopped out of the trade, which would be a very nice profit at 12:16. So 11:30 is almost 12. This would be a half a point in about a week. Could have had more, but I want to try and stay with a longer term trend. And now all of a sudden your trailing stop becomes a very tricky affair. Because if you lower it, you're diminishing your profit and the market could still keep going down. And then sooner or later you get out with what? Almost no profit at all or a loss? Big mistake. But if you don't lower it and it comes down a little bit and stops you out and then goes straight back up again, you took a profit of some sort, but left a lot on the table. And that is very frustrating. So it's very, very tricky as to where you put your stop and when you put your stop at that price. I have a historical tendency of never moving my stop in the opposite direction, decreasing my profit and increasing my potential risk. So if I move it up, I leave it at that decision. And if I get hit, it takes me out where I want to be out, profit, loss, whatever. I don't start moving in the wrong direction. So we're almost out of this trade. It's been very nice. And we're not out. So as long as it stays here and starts going back up again, I will have dodged a bullet. 10-year notes. We never got in. But I have a brand new story to tell here. We have a buy signal on December 26th. The market bottomed out at significantly lower on January 13th. So we're looking at about 3 weeks or something like that. From the low on January 13th until I think it's about 2 days from now, we have it's the date of the 27th, January 27th, will be exactly the same number of days from the bottom of the market going to the left to the first shoulder low. I think that's a shoulder low on December 26th. The head of the formation is on January 13th. The last shoulder low could be idealistically At the exact price we've got today for the low of the day, it matches the first shoulder low almost to the tick. The price is perfect. The timing is about 2 days too soon. Yeah, 2 days too soon. But that's not that much too soon. I will not be surprised if today's low doesn't stay the low and we're going to start going up from here. But I won't be surprised if it makes a little bit lower lows. Not much. It can't be much lower. The shoulders are supposed to be around the same price levels and approximately the same distance apart from the bottom, the head, left and right. We've got exactly the right price, but 2 days too soon. So if it goes sideways for a couple of days and starts to go up, even better. This is the potential last shoulder low being made in a relatively small, medium to small head and shoulder bottom formation. If it does pan out correctly, the neckline is downward slanted slightly, textbook. Minimum upside objective, if it works, is 11 and a few ticks, 111 and a few ticks. We'll see how this pans out. Great teaching tool. Crude, overbought, resistance, stop the rally. Another new low today, again, coming down very nicely, nowhere near oversold, so that's now no help at the moment. But we do have support and a juncture of a previous bear trend line that is about the same price levels in a day or two. So that's my first objective. Support, old trend line. Support levels are not trend lines. Trend lines can be flat, but very, very, very rarely. They are almost always upward slanted or downward slanted to some extent. So the juncture of the two of them is not super common. Looks like a real good price. Now, if that doesn't work, I would expect it to dribble off a bit more, but not a heck of a lot. We've made a historically new high since October and another new high since July. So this recent high a week ago is almost as high as the high back in April of 24, which that one is very important because now you're going all the way back to October of 23 and even a little bit earlier than that, September of 28. This is starting to turn into a longer term looking bull move. I have to hold at a little bit lower levels in the next short period of time, a week or two, and then start to make new highs again up into the 80, 81, 82, and higher in order to be super bullish, probably 90, maybe even higher than that, a lot higher than that, in many months to come in crude. Next, heating oil for the moment is almost identical. Resistance area has been reached. We got overbought. We turned down for the last 3 days substantially and very nicely. New low today. Now we're getting close to the first little support area, which is the high back on October 8th. But we also have some decent support, a little bit more profound, a little bit lower, and that would be down to, say, 2.3, 2.32. That's my expectation coming down to that level. Right now, we've come down close to that previous high, October 8th, but not quite yet. I'm a little bit more bearish, down to 2.32. Natural gas. We had a bearish engulfing a couple of days ago. It immediately didn't work. We stopped out. We lost some money on the next day yesterday. We're flat. Bad signal. They happen. The key is not to lose a lot of money when you get bad signals. Not any system I know of has 100% profitable signals. I don't think it exists. So we're coming up to resistance. RSI doesn't give us any help. We have an uptrend. Frankly, I think this could probably keep going even further. I am noticing something interesting just now. I didn't see it until just now. This 2-day rally is coming up into the same price range as this move. And by the way, the previous head and shoulder bottom and natural gas, which started back in August of 24, shoulder, when we got a bullish signal on the exact low day, and the head of the formation on November 4th, we got a buy signal on the exact low day. Real time. This is not after the fact. Then we have a last shoulder with no particular signal in it. The neckline, like right here, the upside objective measured right there, was fulfilled very accurately. And it was only on January 13th that we got there. Pattern finished. Worked great, including a retracement back to the neckline, just like the textbooks tell you. And let me tell you, for 53 years, having it act this perfectly is probably 5% of the time. You're supposed to get down close to and maybe touch the neckline, but not supposed to go below it. It didn't. Maybe a tick or two, it doesn't matter. And up it went. Great pattern, textbook example. Now what? Bad signal a couple of days ago, coming right back up again. Longer term bull market in effect. You just can't count on the head and shoulder anymore. And I think I'm going to have to abandon any bearish commentary I had, which I'm sure I did because of the bearish engulfing signal. And then yesterday I started to back out of that because the signal didn't work. Maybe resistance was going to stop the rally, which is still possible. I don't know. I'm gonna go flat here. I'm gonna rescind my commentary. It's been expunged, and I'm not going to say much for today about natural gas. Okay, gold, silver, platinum, copper, then grain, then meat. Then I got that stock. SQ has changed its symbol to XYZ of all things, but I've got it back on my list. So, and this YouTube. We're dipping down a little bit today, high and last momentarily, but still down slightly in gold. 8. Bull market in progress. Pennant formed starting October 31. Now, I said I was going to put 2 measurements in, and I'll show you. I explained it yesterday how to do it, and I'm going to use this one here as a starting point, straight up to where the top of the market occurred. That's the first measurement. I'm going to grab the bottom of that line and swing it up so that the bottom of the line is on the day that we closed above the bear trend line, breaking out of the pennant. So that's my first measurement. It's up there someplace. Call it 3,100. The second measurement is from the back of the pennant to the bottom of the pennant, which I think that's going to be very accurate. And that's the back side of the pennant, and that is going to be the same measurement up. I'll just shift it over one day to the right. And that upside objective is 2988. So somewhere between 2988 and 3100 is where I expect gold to go to because of the pennant and the size of it and the measurements usually involved. Next comment, and it's not overbought yet. It got close, but it could jam its way back up to 75 or 80 or even higher as the market jumps quite a bit. Silver tried to break out for 2 days, didn't do it, touched the line perfectly. And today we're going kaboom, down. New low for about 5 previous days. Looks like a minor new low close for the last 4 or 5 or 6 even previous days. So a little bit of downside momentum has started. And I talked about it coming down to support. It's almost reached it today, 30-ish, 30.1. Into the area would get you down to say 29.48. And I'm not going to rule out coming down to this next support area either. But with gold acting the way it is, I really doubt we're going to see a bull move in gold and a bear move in silver at the same time. It's happened. It's not likely. Always go with the odds. You usually put things on your side if you don't know what else to do. So I'm looking for a little bit lower and then up with gold. Platinum, a little bit different story. It occurred to me, electric cars don't use catalytic converters. The reason why platinum became extremely valuable a long time ago was that catalytic converters were invented and they used platinum. So all the cars that were being made from that point in time used platinum and jumped the price dramatically. I don't remember what even decade it was, but it was quite a while ago. All right, so I'm basically looking at platinum as a big sideways trading situation coming up to resistance, which is about let's call it 1030 up to approximately 1060 for the high side resistance area, and likely topping out. And we are just now starting to come up out of that big support area, which has a bottom fairly accurately at 907. And the support stops right at today's lows, and the low also 4 days ago, and the high also 2 days, a couple of days earlier than that, and that is 956.3, give or take. Well, let's look at 957.7. So, are we going to start climbing, or are we going to dip down into the trampoline of support again and bounce out of it? I don't know. I'll vote for the upside. Not very sure about it, though. Copper. Wow, what a great signal on January 17th. Great. Got a sell signal, ER1 overnight, followed it down until today. We have a rally today after making new lows to the move. We have a substantial move back up, not a bullish engulfing, and it won't be a buy signal because we didn't also get oversold. Has to be oversold and a bullish engulfing in order to get a green bar like that, December 26th, a red overbought sell signal on December 12th, and another one way over here. What was that, October 24th last year? Or it wasn't October 24th. That was October 7th. So the signal worked. We're out. We just got punched out a little while ago. Our trailing stop came down automatically, and we took a profit. You don't have much decision to making. That's why automatic trading systems let you sleep better at night, so to speak. And they make the decisions for you. They don't involve greed or fear and all the other emotions that people do. But you have to have a good system, obviously. Next, soybeans. Now, remember, I have been talking about beans, oil, meal, corn, and wheat developing major long-term bottoms. Maybe it lasts a year or two. Started only a month or so ago. We have a new high again today in soybeans. Not quite above the magic mark, which is specifically the high made on September 30th of 2024, and that price is 1081.75. Moving above that high on a closing basis, and I hope not overbought at the same time, would cause me to scream bloody murder. This is a major long-term double bottom formation. The second low was 1219.24. The first one, we got a buy signal just before it started to move straight back up. That's great. And it was August approximately of 24. And there was a few lows around the same prices for about 2 weeks. This is a single day. This was a couple of weeks sideways. Nevertheless, double bottom approaching a major bullish breakout. If we do, and I think we are going to soon, 1187 is the minimum upside objective. Quite a move. It'll be over $100. Nice. Okay. Let's see how this handles a little tiny bit of resistance and being close to overbought in the next few days or a week or so. I don't mind a minor dip down as long as it doesn't last too long and doesn't go too far down. Now, soybean oil, minor new low again, right at that support area like yesterday, very close to the same prices. Bouncing off of it very nicely at the moment, up 0.99. I like what I see. I think we hit a low. RSI has nothing to do with it because it wasn't close to. It was very neutral, 50-ish, very neutral. So it's the support area that causes me to say this, and the fact that the lows 2 days in a row are right there at the support level, and we're strong at the moment, about high and last, looking pretty good. We might have a bullish engulfing, but it won't be a buy signal. Nevertheless, bullish engulfings tend to tell you the market's going to start rallying all by themselves. Don't need much accompaniment of other reasons. I do with my strategy, which is 100% programmed, automatic. Next, soybean meal. Already a minor new high today, up on the day a little bit, getting back up into the old pennant it broke out of, getting closer to resistance, and not too close, but getting closer at 70 to the magic mark I like, which is 75. So I think it's got a little bit more rally into resistance, and then a small pullback. Next week is a full week of January, but Friday is the last calendar day of January. So all of next week and the rest of this week, today and tomorrow, we could see a little bit more strength into resistance, and then maybe sometime next week start to pull back down a little bit. We have an outside update currently in corn. And finally, we have reached the upside objective I have been talking about since the major breakout December 24th, Christmas. So it has been almost exactly 1 month. I told you at that time that the upside objective was 494. And guess what? We're trading at 492 at the moment. And you know what the high of the day is? 494 and 2 ticks. Great. And an outside up day, no less. In overbought conditions, no less. And you know I'm about to say Bass Ackwards reversal. These outside bullish engulfings in overbought conditions, only when they're in overbought conditions, are sometimes bearish, not what they look like. And if you add to the fact that it's reached the minimum upside objective off a previous head and shoulder bottom, that's a triple combination. Now we are still 7.5 higher on the day, but that's fine. If we close below yesterday's close all of a sudden by the end of the day, we will have a red ER sell signal. This does not do anything but cause me the commentary I just made about what I call a Bass Ackwards reversal, because they normally look quite bullish. But let's see what happens to this one. And we got wheat. Double bottom formation from August until the last month or so. Like what I see, minor upside breakout 2 days ago on Tuesday, Wednesday, and now today a little bit down earlier, only up a couple pennies at the moment, no big deal. But I like in general this bottoming out situation with the broad double bottom at very, very low prices historically. You realize this is the lowest low since the war started, which was way back on the March 8th of 2022 date. 2.5 years. Okay. Yeah, almost 3 years. Almost 3 years. It's been going on. Terrible. We did get a sell signal, a red bearish engulfing ER sell signal on a double limit day at the top of the market in extreme radical conditions. I haven't seen that kind of price action in grain or pretty much any market since the Russian grain deal, 72, 73, I think was the year or two that it happened, 74 maybe. That's just about a year or two after I started in this industry in 1971. Next chart. Cattle, new highs. Bull trend, major bull move. Don't see anything. Here's that flat bottom, a flat top, right triangle, by the way, ladies and gentlemen. You got a high, then you had a high later on, about the same, then a high again, same, a high again, same, a high again, a little tiny bit higher, but not much. And finally, it showed signs of breaking through it. Didn't hold the first time up, a bear signal at work for a few days. held, and then since December 19th, a month ago, it has just gone up substantially, consistently, and quite a damn bit. So, bull market, upside objective. I didn't measure with this pennant with the vertical height of the back of the pennant or wedge, right triangle, I should say. It's quite bullish. I hate to say that. I do like my filet mignon, but damn. Okay, very bullish. I have to get a 4 ouncer instead of an 8 ounce. Oh boy, heat. Hogs. Sorry, hogs. Head and shoulder top in progress and doing pretty darn well. First shoulder high, November 1st. Top of the market rally high, November 27th. Last shoulder high, December 23. I've got little rice paddy hats, so to speak, Chinese little rice paddy hats for the markers for the shoulders and the head. I've got the trend lines that are relevant. I've got the neckline, downside breakout, December 30th, halfway down, oversold in a support, bounced all the way back up to the neckline. Classic, stopped, maybe a squeak higher than the neckline, but not anything to be concerned about. And then down to a new low yesterday. Today, a little lower, bounced, not particularly important. I think within a week or two, or maybe 3 at the most, we will be down to 81.6. Give it a touch. Let's call it a little below 82 for my minimum downside objective. And now the new symbol for X for the old SQ that I was watching for a couple 3 months and still am. The symbol now has changed to XYZ. I don't know what the name of the company is. I really don't care. It's not important to me. I read charts. So now XYZ has come into support just like SQ did, and it changed its name just 2 days ago. I thought I had bad data for yesterday or Tuesday and Wednesday, but it turned out to be a symbol change, which I didn't catch. I see that we did have a bearish engulfing yesterday, an outside down day, but it's not overbought, so there was no signal per se. Now, I'm also noticing I don't have my strategy running on this. These are standard candlesticks with green and red bodies. So anyway, a little bit more of a dip, could get a little bit lower. I don't mind if it dribbles off into support, but the head and shoulder top has worked past tense, and it worked, and it got finished, reaching the downside objective on January 10th, came down a little bit more. Remember, I say the objectives are minimums. They can go further. It did, not too much. Get close to oversold, not quite, and bounce back. I think we're on our way up. I don't think we're going to see any lower lows below 80. And I like what I see in general, but I've got to allow for a little bit more of a dip and then up. Back to the mini, high and last, looking awful damn good. 1 minute data. While I'm chirping away here, we have a new high for the session, a high higher than yesterday's high, a new high for this last leg up, and I don't see anything stopping it from going a little bit further today. You guys have a great day and profitable trading to you.